Ira Epstein of Linn Associates with your agriculture update, and this update is for, let's see where we're at now, Monday? Yeah, the 4th of March, 2019, and we're just after 3:05 p.m. Central Standard Time. A mixed day in the grains, and you would have thought this market could have done better in the grains, and it tried. It got up, as you could see, to 924, 377, 461, and you sold off from those numbers. And part of the problem has been that how much of this is baked in from hearing the deal that's going to happen with China, and supposedly there's a time frame in the general March 27th area where we might get both Premier Xi and President Trump together to actually do a deal. The stock market on that news went up initially hard, then fell 500 points, as you can see. It has since come off the lows over 200 points from the decline. Gold was down, the dollar up a little bit, but certainly weakening as we're getting on. And there's a news conference going to happen this afternoon from the president. Who knows what's going to be said in that, but what we do know is the House Judiciary Committee is going full tilt to bring in all kinds of documents. The Mueller report is due. We just don't know where the politics and the commodities begin. That's one ends, the other begins. As we're looking at the soybeans, what I'm not surprised at, and what we've talked about for weeks, has been if the market fell, maybe it was going to get back to the 18-week moving average of closes to find an area of support. If we take a look, today's low is 901.25. It's right over my head here, and you can see that is about where you're at on that 18-day average. You finished 903.5 roughly. As we take a look at what's been going on, you get these spikes in the moves on the daily chart, and we're still meeting with lower lows as the market is going on. Now, the good news is you had follow-through from Friday's rather sharp day. As you can see, Friday, you got down to a new low towards the $9 level, closed higher, went up today, and managed to hold on to a gain. So no matter how you want to look at it, the market probed the $9 level, areas that it's been at before, and found support in that general zone. As for a trend, there isn't one. I define a trend, if it's in a downtrend, as having lower highs, that's a plural with an S, lower lows. What we have right now are lower, what? Well, you had a lower highs, but with today's rally, you took that out. You got up today to 924.75, so you have a 923.25. You have a lower low, a higher high, singular on both. That's not a trend. The battleground is the zone of, and I just want to use this word, the zone of. The 18-day average is resistance, roughly, and support down to the 100. Now, you're going to say, rightly so, Ira, you plunged under that. You're correct. But it pulled back each time trying to check that 100-day out and got through it. What stopped the decline in the market was the Bollinger Band bottom. See the black dashed lines here? They're not parallel to the Bollinger Band tops. Window envelopes that I don't show on these charts are. These are an algorithm designed to keep the market trading within them 95% of the time. My theory is that the first time you hit it on the upside or the downside, you'll see professionals coming out of the market. If they're long, coming out there. If they're short, down here. Now you're going to say, how do I have an idea if they're long or short? Well, part of what I teach is if the market's over the 18-day average of closes, you should be having an upside bias. Under it, a bearish bias, and the neutral number on a chart is that 18-day average of closes. You can see where the battlegrounds are shaping up. Now, in terms of momentum, if you come back with me to Friday, you had a market here that had a 28 reading. Anything under 30 is oversold. So we had a market that probed its lower Bollinger Band, found some support, went back up to the resistance of the 100-day average. Next resistance would be the 18 if it continues up. It got up high enough on that to take out a previous high, and it took itself out of an oversold condition. So I'm going to call the market just neutral. In the meal market, it's very similar. If you'll notice these probes of the lower Bollinger Band, number one, they're not buying opportunities. They're covering short areas. There's a big difference. If you bought here, the market's still been making the overall lower lows. Where's the resistance been coming in? I think you'd agree. It's the 18-day average of closes and From Friday's reaction back up, you went and you closed over that number today. The problem is, even though that turns the bias up since the market's over the 18-day average, you still have a lower low, higher high pattern. Where would you think the next resistance point is if you rally? I'm going to think it's between the Bollinger Band, 313.80, and the 100-day average, 314.70. The bigger problem for me is the market's worked itself out of an oversold condition, and it's not trending. That's more my problem. In the soybean oil, they're changing the crush spread. They're putting value to the meal, some value to the bean, and they're taking the value away temporarily from the soy oil. Now, with the problem in looking at this market from the short side is you're already very oversold. If the market continues down, the Bollinger Band's the first support at 29.78. The resistance point is 30.52. If the market does not take out 30.06, what would happen? It did. That's your problem. You got to today, 30.05 is the low today. So you have a lower low. Even if you rallied straight up through 30.64, I wouldn't have an uptrend. I have a downtrend because you took out that 30.06. I have a downtrend in a market that's oversold close to support. In the corn market, you spent 2 days here under the lower Bollinger Band, snapped back on Friday. I would think resistance, if you had a hard rally, could be up here. You're oversold, not embedded, and you're getting a bounce. That's about all that I could say. Are we trending? No. You have a higher high, lower low. In the wheat market, you've had a pattern of lower highs, lower lows, bearish as can be. You've been riding this lower Bollinger Band down from this sideways action that we had talked about before this even occurred. So until the Bollinger Band, until the slow stochastic, the red line, the K line, closes back over 20, I think on rallies you'll probably be greeted here with selling. In the sugar market, you enter a period right now of being, number one, very oversold. Number two, the trend has been down. You're getting close to your support of the lower Bollinger Band. However, even with that, keep in the back of your mind, you've got a whole series of seasonals that get very bearish in sugar right now and carry on through the month of, actually into April as I'm looking at them. So I would think that rallies there might attract attention if, and there's a big if here, you get away from either being oversold or in bed. Until that occurs, I think that the money's been made to the short side. You might get a little bit more, but I'd be cautious until you embed or get rid of the oversold condition. In the coffee market today, a huge reversal day to the downside. Now, if we take a look on the close, you still have an embedded reading that, what, 20.54, both numbers aren't under 20, nor were they both under 20 on Friday. They were prior to that day after day. You can see that right there. This means you've lost the embedded reading. Now, it doesn't mean diddly if you get through the last break low here of 96.35, but barring that, the odds favor, even with this break, that the market's going to try a bit to work itself back up. We'll see if that happens tomorrow. In the cocoa, you've got pattern of lower highs, lower lows. You can see the resistance. It's the 18 and the 100-day, the red and the green. Market is oversold right now, a bit excessive since it's under the lower Bollinger Band, but barring the oversold, it's still very much in the bear camp. The cotton market had what I call a failure day today. It had a good shot at a rally, tried to get to the upper Bollinger Band and missed it. Then it closed what I'll call sharply lower, 72 lower. It kept the trend up by having the higher lows and the higher high there. The problem is you lose the higher high pattern if you take out today's low of 73.09 or have an inside day. Either one will give the swing line lower highs and higher lows. You step out of a trend again. In the cattle market, each time we've gotten recently to these upper Bollinger Band areas, the market has failed. Yeah, here you stayed over it a couple of days, but on the whole, you get there and you run into resistance. The support's back here at the 18-day average. You lost your shot at what we call embedding. You turned down and you've kept it down. I think the market just stepped out of its uptrend, but it's not in a downtrend. And in feeder cattle, you went down to the one of the targets on the downside would be the first challenge of a lower Bollinger Band. You hit it today, hitting 144, let's call it 47 and a half. The low is 144.30. I think some pros took the money off the table. I see resistance back up here. You're not oversold, so I'd expect to see selling on rallies. And in the hog market, you got finally back to the 18-day average. In the past, we've recently been failing at this number. And I realize that hogs are one of those markets that we're all hoping to see China buy more pork of, and I think that's what this rally's been about. But now you're at an important resistance point. That does not mean you're bearish here. You're not bearish, you're not bullish. What you have is a market that got up today and at the end of the day closed under the 18-day average, so the bias is down. You've had a thrust to the upside where you lost the downtrend literally right on, see this? Right here. When you got there, you lost the downtrend, putting into play maybe you get back to the 18-day average, which you've done, and I think you've stalled right now temporarily. We wait and see what the next trends are going to be. You know, we talk about all this in great detail, and you know, come weekends, if you're like me, Sunday night, as the markets are getting ready to open electronically, not necessarily the meats, but certainly the grains, you're looking what's going on. This weekend was one of these weekends, if you were watching all the firefly, as I call it, between President, well, actually, it wasn't President Trump, it's all the Democrats on TV coming out what they're going to do to the president, and they did it today. They served up a lot of notices for documents, and there's a lot brewing right here. Well, how did it impact the markets? Then you have China. What do you do there? Venezuela you've got coming in for the energies. We write about all this, and we write about it in a way that we think makes it easy to understand from both a commercial user, a speculator, an option, or a futures trader. We give you the ideas, and then you can run with them as you'd like. How do you get hold of this? Well, it's pretty simple. You can give our staff a call to put you on our list. You can give us, go to our website, sign up. It's a limited time. If you're an account of ours, of course you're getting this. If not, you can see what we get, but you're not going to keep getting it. You'll see it so that you have an idea what you're missing. That's the whole goal. I'm Ira Epstein. You have a good day, and I will talk to you all at the updates in the morning. Take care now.